Hi traders and welcome to the Technical Analysis Market Watch on Friday the 16th of June. So I've seen some really big breakouts, especially in the last 24 hours on a lot of the indices and the currencies that we check out each week. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and we can see a really big 24-hour candle that's actually hit the new resistance zone straight at this level, which was the bottom of this head and shoulders that we isolated a little while ago. This is a very, very important zone for it. We can see the multiple touches here right through this year. We can see big support at this level here. We know we had resistance right through there and support, of course, heading underneath the head and shoulders pattern there. We've hit it now with a very, very big sustained move. You can see that we bounced off a very strong level, which was actually, ironically, the inverse head and shoulders. So we've basically gone from inverse head and shoulders neckline to normal head and shoulders neckline in basically one move without a pullback, which is very, very significant, very, very strong move. And you can see we've got a 20 and 50 moving average about to cross, or pretty much crossed. Actually, that they'll be confirmed as soon as the candle closes. So there's no coming back from that in terms of the cross. But look, it's at a very, very strong level of resistance now. So yeah, we've obviously seen some very, very big market moves, and yeah, that has influenced the Aussie USD. But if it's going to pull up and find problems, this is the area it's going to. This is a very, very strong zone for it. And if you were looking at taking a profit, this was the level that I would have been taking profit at the very, very least, locking in a break even or taking some profit off the table, because that has been an extraordinarily strong support, long move. I wouldn't normally wait that long before taking profit, especially if you were picking it up down here, which is where we were really. I mean, this is the area that you wanted to go long because of all of the support that was there. So conversely, on the other side, look, you can make a case. There's another head and shoulders over here where the neckline was. Like this is, the Aussie's been very, very technical. There's no question about that. I could highlight 15 patterns only in this screen that have played out absolutely perfectly at the right level. So it's no real surprise that it's actually hit this level, but we do have to respect it because it has got two head and shoulders resting on it, as you can see. So what we do in this situation is certainly not take the break up. If you're still keen on the Aussie going longer, you wait for it to break through and then come back and retest it from the top. And if it doesn't happen, it doesn't happen. But that's the safer trade. That's the more conservative entry. You don't want to be the first one in on a break of this level. But if it does start to roll over and starts to show a series of lower highs and lower lows on a smaller time frame, like say a 1 hour, then this level here is the level you want to be aiming for, which is around that sort of 78, 80, 67, 80 area, sorry. That's the level that you want to be sort of aiming for, about 100 pips down from where it is now. But it's a good level to bounce off because it's a very strong level as well. So I would expect that it would probably find support there because it was previous resistance, and that will make a difference for it. So if you're going to scalp it short, look for a reversal at this level, and then only, like I said, there's a lot of momentum on the way up, so I wouldn't be trying to short it too much. But if you want to do that, yeah, around this level would be your target. But failing that, if you get a break above the 69 level and it comes back and retests it from above to below, then we look for a move up to the 70-cent mark. But again, I wouldn't be taking the first break. I'd be waiting for the conservative entry, which makes more sense. All right, we'll move over to the US dollar CAD, and we've seen a significant break here as well in the last 24 hours. Again, a daily chart. And you can see that we've broken down through a very important channel. This has been very, very solid for a long, long time now, as you can see, all of this year really. And now we've seen a break of two levels really. We've seen the break of the 33.20, which was a very strong support zone. And then the secondary support, which is also as important, is that 32.50 area, which has now been taken out. So that, assuming this daily candle closes here, which I'm sure it will, you would be looking at a significant break of that channel. Again, I wouldn't be jumping in on the short saying, well, this is doomed, because the ideal trade would be a pullback up to this level. I think setting an alert back at the level that it broke, which is around that 132.60 to 50 area, that would be the ideal scenario. Now, when I say alert, I don't mean just an ordinary short trade. I'm talking about setting an alert to have a look and monitor what's happening at that zone, because what we can do there is wait for a reversal, a small change of trend on a smaller time frame that is going to indicate that we are going shorter again, okay? Really, really important that you just don't jump in on a short, because this could be a massive rebound. And if it does rebound really, really quickly, you might find yourself up in the 33s before you know it and taking out stop losses. So if it gets back up to this level here and it looks like it's going to basically roll over, which is on a 1 hour chart. We see a series of lower highs and lower lows. Then we can look at taking short opportunities back down to this level here, which is the next real level that I would be paying attention to, because that's where the next resistance is, or that was resistance, which should now be support. It does look like it's a long way away, and that's why you can be patient and wait for a pullback, because if you don't get it, it's probably not a quality entry anyway, and then we'd be looking at smaller time frame pullbacks to a 20 moving average along the way if it continues to sell off. So yeah, certainly good trading if you were taking the short, but again, it is at a zone now where you probably should have taken profit. Well, I would have. And yeah, just be mindful of that mini reversal that probably will pull back, because it's been a very long sustained sell-off as well. Over to the US dollar yen, and look, this one's an interesting one because it's stronger than the other US dollar based pairs, but it has also sold off. So we can see here that we failed to make a new high, and that we were talking about that last week, and it came back down to the 20 moving average, and it's attempted to go high again, and it's going to fail quite miserably. Obviously, you can see we've got a big shooting star candle there, which tells us obviously that the sellers have completely obliterated the buyers in that trading period, and it's failed to close above that high. So that is a weakening sign for it. There's no worries about that around that 140.50 area. Yeah, look, it got as high as 140, 150, and that's really significant in the sense that, this is how much it's sold off in a day. And obviously the last 24 hours have been very important for these markets, but it's important to pay heed of what has actually happened price action wise. In my mind, hasn't changed in this one, that while the 20 moving average is holding it up, I'm not interested in taking the short. But if we get a daily close below the 20 moving average, so below that 138.80 area, you can start looking at the next support zone, which is around that 138.20. I'd be looking at scalping opportunities on the yen on the way down. And of course, if we see some sort of a reversal that starts to push it up higher, it needs to actually break this 141.88 before I get interested in any long action on this one, because it's failed too many times now for me to take it seriously until it actually proves itself. So it needs to prove itself above this level, and then we'll be off and ready to go. But a trade or close below the 138.80 on the 20 moving average, and then I'd be starting to target mini shorts down to the next serious support zone, which is a very serious support zone here. You can see right through the history here how important it has been. Okay, over to the dollar index. Obviously a sell-off, no real surprises there. It's broken down through all the key moving averages. I did say last week that it's a do or die level. If it doesn't hold here, it's in trouble, and in trouble it certainly is. You can see that it's sold off obviously very heavily over the last few days. But, support is not very far away in terms of points. It's only about 60 points away from a pretty reasonable level of support. But of course, the euro is the one we want to be trading here. So we'll jump straight into the euro. And you can see we've had a big move up. Obviously, found that bottom very, very appealing. 200 moving average, very strong roll reversal zone. None of these are surprises. You know this. We talk about it every week. And it's really good to see them all play out. So hopefully you can see how technicals really play into each other. Close above the 20 and the 50 moving average, and it was off. Once this candle here closed above the 20 moving average, which was a couple of days ago, this was looking very, very strong. We had the lightning bolt at that point, because that's what you've got. You got the low, the high, the lower high, the higher low, sorry, and then the new higher high, which is this candle here above the 20 moving average. That's your signal to go. And if you were there at the time and you were able to spot that, this trade should already be just about over. We're heading to an area now where the support is not very, well, the resistance will be very close now. The 110 level obviously is a very important target for it. You can see here that this was previous resistance and a lot of it. So really the one, I'll pop a line there. 110 would be the area that I'd be aiming for. Probably 110.50, because that's where the real support is. But as an intermediate entry, I'd go to the 110. Okay, and then as a secondary, we would be going to the 110.50. But it's well on its way now. You can see it's obviously a big, strong move. I wouldn't be looking at shorting anything that's got this much momentum unless it actually hits that level and rolls over underneath that resistance. If it doesn't do that, not interested in taking any shorts on that one. Just look for small pullbacks on the smaller time frames to the 20 moving average if you want to get involved. Little pullbacks to the 20 moving average in the direction of this momentum, and with a target of around that 110, it should be pretty good on the euro. And the S&P 500, of course, no real surprise here. You can see that we've had a big move up. We've broken through that level. Yeah, it was respecting the trending moving average. Then once it got going, it just completely cranked up. Never came back and retested the level that I would have bought it at. But that doesn't concern me, because at the end of the day, it can still come back. And if it does, we'd be looking at it a lot more seriously at the trending moving average and a little mini roll reversal zone. You know, target of 45.50 really is still the goal for this one, but I would like to see a pullback before we start going long for that, because you know it's really not that sustainable that it can continue going up. It's not healthy. It's not that it's not sustainable. It could certainly do it, but it's not a healthy way to trade. We really want to see pullbacks that are meaningful. That gives us the entry points that we want to get into to join the actual trend. But there's no question it's obviously very strong and very long, but we want to enter at quality entries too. We don't want to be jumping on a moving bus, of course. If it does start to roll over at this level and we see a series of lower highs and lower lows on a 1 hour, I could look at potentially shorting it back down to the 4,300, but that would be a target. I wouldn't be looking any lower than that at this stage, because it's got too much momentum on the way up. And of course, in a few days, the 20 moving average is going to be right on that level as well. So that could be a really good trampoline point for it if it does come back and test that level. And if it doesn't, we just let it go and wait for it to get up this level and look at another opportunity. Again, we don't want to be moving or jumping on a moving bus. So I hope you had a great week's trading. We've seen a lot of big moves this week, especially in the last 24 hours, big breakouts. And it's going to be very interesting to see how we go early next week, because if these breakouts continue, yeah, we could potentially have a very strong trending week next week into the direction of the bigger take profits that we've been looking at. So have a great weekend, everybody. I look forward to seeing you all next week.